Hi, everyone. My name is Jahara. I am the founder and CEO of Catalyst Labs, which is a brand new organization, only about a month old. We are the same team that ran the Nest.io for the last 6.5 years. So many of you know us. So delighted to have some friends with us on the panel to discuss this important subject. All of you have been watching the space, so I won't go into too much depth on what we're going to talk about, but fintechs have been disrupting the financial sector and assisting in the acceleration of financial inclusion globally. And in Pakistan too, as digital adoption began to increase during the pandemic, fintech startups began to fill the gap that large banks and financial institutions were not being able to. With supportive changes in regulation by both the SECP and the State Bank of Pakistan, the emergence of new fintech players became a reality. The growth in e-commerce has seen a need for more efficient digital payment players, and young, talented founders with a knowledge of the market and of finance have come forward to provide the solutions that are now needed. For many initial players, licensing, compliance, and capital. But suddenly, in the past few weeks and months, we have seen huge amounts of capital being invested in startups in the fintech space, something that many of us didn't think would happen. So we thought, this is the right time to bring together our local VC experts to try and make some sense of what is going on and why, and what impact all this will have on the overall digitization of the economy. So before we begin, I will ask each one of you to introduce yourselves and also to give us a one-liner on your investment thesis. Because I thought at first I would do that myself, but I think you can do it a lot better than I can. We are missing Meena Tariq. She was a little bit under the weather and she may join us later or may not. So I think we'll just get started. And then if she joins us, well and good. Otherwise, I think we have enough room for discussion with the four of you. All right, so why don't we start with Atif?
Hi, everyone. Congratulations, Jahan and team, on launching Catalyst Labs. Excited to be here. Can you all hear me fine? Okay, great. Hey, everyone. My name is Atif Awan. I'm the founder of Indus Valley Capital. We are a Pakistan-focused early-stage fund. We've invested in Airlift, Bazaar, Mfit, Remote Base, and some others that we have not yet announced. Our thesis is very simple. We want to be the first backers of the truly transformational companies in Pakistan for the decade. And we want to be very close partners to help you with product and growth and do that.
Misbah, why don't you go next?
Sure. Super excited to be part of this brand new Catalyst Labs with not so brand new people, and I'm grateful for that. My name is Misbah Naqvi. I am a co-founder and GP at i2i Ventures. We are an early stage VC. We invest typically in seed stage deals. Our investment thesis is to work with founders that are solving big problems in Pakistan, that are building transformational businesses, who we are excited to back. And because of all the work that my partner has done, having set up Invest to Innovate over the last decade, and our work with founders in Pakistan, as well as the work that our research team does in the insights arm, we're quite well positioned to understand not only what founders need and require, but are really excited about amazing founders that we get to back. So we consider it a privilege. More to come, but that's a little bit about us.
Thank you. Rabil?
Hello, everyone. Good to see you again, Jahan. Lovely to see Catalyst taking off. Can't believe it's already my second panel with Catalyst. So very exciting. I'm founder of Samayakar. We are an early stage Pakistan-focused fund. Our thesis is primarily around leading Series C and Series A situations in technology or technology-enabled scalable models in Pakistan. The aim is really to try to capitalize on the digitization of our consumption trend that we're seeing across our economy, and hopefully back founders that are making big, profitable, scalable businesses in the country.
Thank you. And last but not least, Tariq.
Thank you, Jehan. Hi, everyone. My name is Tariq Hussain, and I lead the investment team at Fatima Gobi Ventures. We are a dedicated fund for Pakistan supporting early stage ventures. Our thesis behind our fund is we believe emerging market problems has to be solved by emerging market entrepreneurs, right? And what we are trying to do is to source the best founders in the country, back them, and help them scale regionally.
Okay, great. So let's get started right away. Now, for many years, as I said earlier, many of us have talked about how fintech was such an exciting area with a lot of potential. It seemed like wishful thinking at the time, but until recently, when we've seen a flurry of announcements and exciting progress in the fintech domain. So what's changed and what led to this wave of investments? So any one of you want to start, just go ahead. Or do I have to?
I can start, I'm not the shy type.
Right.
So I think, yeah, so it definitely have seen a change in the last couple of years. I think there are 2 or 3 factors that are contributing to it. One is the overall broader growth in the ecosystem around the startup space in Pakistan. Obviously, we know there's been, government has been pushing on support programs. There's been a lot more happening in terms of founders coming in and setting up companies. But I think on the fintech specifically, first and foremost, I would say is the government and the regulatory aspect. So with an opening up of more opportunities for fintech, so beyond just what was the PSP license initially, it was the only one, the payment service provider license. We now have an electronic money institution license as well. And the government is also considering a digital bank license, which would be a little bit different as well. So the licensing and the opening up, even though it's still a regulated space, has happened in the last couple of years. Along with that, I think what has happened, and of course, Rast is another initiative that has just come in. I'm sure a little bit later, we'll talk a little bit more about the recent news about the state bank actually allowing banks to charge on interbank transfers, which is not the best news, but we'll come to that. So broadly speaking, some really good moves on the regulatory front. I think what we're also starting to see is as fintechs have heated up globally, there is this trend of looking outside Pakistan, seeing what's worked and then adopting it for Pakistan and looking at opportunities like that. I think companies like SafePay, which have been to YC, been able to get investment from a company like Stripe, which is a globally well-known, one of the leaders in fintech, is also a really good sort of momentum building point for the ecosystem, because then others look at these opportunities and say, great, I can also potentially look at it. I think banks, for all that we say that is negative about them, I think the positive thing is they have started to look a little differently. I think they have started to see that fintechs are not foes, but they can actually work with them. And that at the end of the day, there's a lot that they can be creative about, where products can come in to eventually reach consumers that have been left out up to now, or maybe be more efficient, where a bank has a role to play, the balance sheet has a role to play, the systems have a role to play. So we're starting to see open APIs, we're starting to see much more opportunity for banks to open up potential wallets for fintechs, etc. So some of that is happening on the banking space. And I think the last thing is generally, this is more of a general comment, but as we're seeing maturing of the ecosystem, which is still very early, we're also seeing founders that have had experience in high growth startups elsewhere, like Kareem, for example, now look at Pakistan. And this is one of those things where a rising tide lifts all boats. So we are starting to see this in fintech as well, where good founders coming in, good opportunities coming in, and then investment is also increasing. I think this quarter we've had around over $40 million already committed towards fintech. So all of those things are actually helping to sort of push the fintech space forward.
Thank you, Misbah. Atif, you wanted to jump in and add to that?
Sure. Yeah, look, it takes money to change money. That's a tagline by Ribbit Capital. And since you started like Pakistani startup ecosystem early on, there were players like transportation, logistics, grocery, food delivery. That doesn't require as much capital to get started, but fintechs require a sufficient amount of capital, which requires the willingness at seed for large enough checks. And even a year ago, that willingness was just not there in terms of international capital. So what's changed is that Pakistani startup ecosystem, it's finally on the global map. There's more and more interest, and I think the early wave of startups certainly helped with that. And as those proof points accumulated, now you had funds, TAG raising $5.5 billion, basically as a pre-seed round, on a deck and a team. That wasn't just possible. So I think that's happening. In terms of market sizes, I mean, fintechs are the most obvious market. If you think about an average worker making 100 rupees, 100 rupees, like 40 of them go to food in Pakistan, and maybe 10 or 15 go to other e-commerce, and the rest goes to education and health and housing. But all 100 is available for fintechs, right? So that is the largest market, and it cuts multiple ways. You can borrow against that. You can bank it, payments. So these markets are just waiting to happen. Now is the right time. And then, as Misbah pointed out, all the other things and regulators, recognizing this change that's coming and creating mechanisms where you allow these new innovative models to actually be tested and then rolled out broadly. I think it wouldn't have happened without that. So all of that is in place. So we'll see a lot more in the coming quarters.
Okay, great. Anything that Rabil or Tariq you want to add to this, or should we move on?
I think very well covered by both Misbah and Atif. I think the general environment has improved quite a bit over the last year or so. And as one of the beneficiaries, fintech perhaps is getting some disproportionate love. But it's not disproportionate because, as Atif said, actually it's a wider domain that they can go after. And now some of the, let's call it the first infrastructure related investments that were more payments focused, etc., had been going on for some time. But now some of the adjacencies are now coming into play as well. And I think that's where we're seeing some of the entrepreneurs also get that kind of risk capital, which was just not there at a very, very early stage. So the combination of all of those things is leading to this. But I'll let Tariq comment if he has anything to add.
Tariq, Fatma Gobi has been sort of part of some of these new rounds that have been invested into fintech. So maybe you'd like to add to this and explain why Fatma Gobi has been so proactive.
Yeah, I think just from a macro view, I think timing is everything, right? And the time at which Pakistan has developed and become a destination that has received a lot of interest, more from the West. We haven't really seen interest from the East yet, but more from the West. And I think that's largely driven by a lot of these geopolitical circumstances, right, between China, India, and the US, right? So a lot of that capital needs to find a home. And Pakistan happens to be that, fast-growing, really hot ecosystem, really smart entrepreneurs, and a very sizable market, right? So on a general note, the ecosystem has become very, very hot, right? Now, and if you look at other ecosystems, typically you see mobility as, e-commerce mobility as the first vertical that takes off, right? But soon after that, fintech picks up, right? And fintech is not just exclusive to fintech companies. Every other vertical at some point will become a fintech play, right? And I think that's one of the reasons why we have funded a lot of the fintech opportunities that we see in the country. Anything from online payments to digital lending to POS plays. All of that seemed very, very interesting to us. Just if we just look at it from a very simple lens, just the market is massive, right? And if I could add, it's not just going after the unbanked, right? Pakistan has a massive unbanked population. It is also going after the underbanked, right? A lot of banked population in Pakistan are underserved, right? The banks aren't doing enough, right? It's maybe not too a bit risky for them to go, to serve a certain population class in the country, right? So given these two, massive population sizes, there's immense opportunity in the space.
Thank you. So if we move on, do you think that COVID has been a blessing in disguise in terms of foreign investments coming into the country, as investors can now view Pakistani startups with the same sort of lens as they do international ones. So Rabil, you want to start?
Yeah, sure. I think now the excuse of not having visited a particular place or have met founders in person is no longer valid. Kleiner made their investment in Pakistan without visiting, and I guess, like, if we're using benchmark of, like, Kleiner coming to Pakistan, I think we should also appreciate the fact that now these types of deals are taking place remotely, and now, like, Pakistan, as Atif mentioned, is on the global venture radar, and I think that's really what is now being accepted more and more by venture capital providers as the norm going forward. I think borders, we've been speaking about, like, being really just on maps rather than in practice, but like in Pakistan, it felt that there was this a mental barrier almost that people didn't have until they came and saw the excitement and the buzz on the ground. So I think that certainly has changed, and I think we all have had to adapt to that as well. Previously, we were also quite focused on, again, being on the ground and being, like, present and having a lot of that interaction in person, judging by body languages and whatnot. But I think we're having to adapt to our own processes accordingly.
Okay. Misbah, do you think this is going to get even broader as people see that these big investment firms have started investing in Pakistani fintech? And if we see some real good adoption, do you think this is likely to escalate even more? Because, when you look at figures, in 2020, the figures were good, but now suddenly in the first 5 months of the year, they've jumped. I2I has done a study and seen that, those figures have more or less, 300%, 200%, something like that from last year. So do you think this is going to continue to grow, or is it just a one-off?
No, absolutely going to continue to grow. And yes, our insights team is going to release figures at the end of the quarter. But as most of us have been discussing, it was also an article which interviewed Kulsoom recently. We've already crossed 85 million before the end of the quarter, whereas all of last year, startups raised around 65 million in Pakistan, give or take. So, before the end of June, we're already at 85. In fact, unofficially, we're probably at 97 already. Given that a few rounds have not been disclosed. So that's kind of the rough number. So I have no doubt we'll be crossing 100 million soon. So definitely a big increase. I think this is only the beginning. All of us who are on this panel are investing in Pakistan because we're really bullish about this opportunity. I don't think it's a blip. I think it's just we're getting on the radar. Things have become easier, like Rabil was saying. It's leveled the playing field for people in Pakistan, but also recognizing that we're still a high risk market, but with that also comes potential for high returns. So for people that are actually going to come in right now, they are actually getting access to deals relatively cheaper than they would be in other markets in the world. And then if you just look at the opportunity that Pakistan presents, I mean, just looking at fintech alone, we've only just scratched the surface. We have like a handful of fintechs, even though they're growing. Most of them are either in the payment space or looking at neobanks and providing store of value. There's a lot more that we need to do. We haven't even touched the surface in terms of bill payments and fees and pension funds investments, and there's a lot more that actually can be done. Payments and electronic payments, again, talking about fintechs, are also just getting started. People are starting to get comfortable. And actually, that's one thing that COVID has actually helped with, because people have become more comfortable purchasing things online. And so an online payment option is also one that they've started becoming comfortable with. So I think what's been happening is that there's been this spur of growth that we started to see in certain kinds of areas. And I think fintech is definitely one of them. And I don't think it's just a blip. I think it's going to continue. On the funding side, as more and more international funding looks inward, there's funds in Pakistan as well. People that have deep pockets that are looking to see which are the sectors that they can invest in. So it's not just coming in from outside. It's going to be local funding also, which is going to be unlocked in a big way. And I think we're going to continue to see the momentum this year and beyond.
Yeah, and Kulsum adds, she's up early. She says growth is also because of the pandemic, not just in spite of it. Atif, you were one of the first people to start investing from outside into Pakistani startups. Now that there are these companies from the US mainly who have started investing in Pakistan, do you think they are looking for local investors with whom to co-invest? Or are they predominantly going at it on their own? And, you know, for the long term, how do you see this playing out?
Yeah, so I think what's really interesting that's happened here is the proportion of VC funding coming into Pakistan that's from the US and then broadly US and Europe, right? Like if you look at Southeast Asia, a lot of it was regional capital. If you looked at MENA, a lot of it was regional capital. And that's at the power of Pakistani diaspora. I think like we have done much better compared to Indonesia, compared to MENA in terms of going to the West, going to the tech industry. And I think like we're seeing results of that, right? Now, those strong networks are bringing this capital, but a lot of this capital, especially the larger checks, there is this desire to partner with the local VCs for good reason, right? Because while COVID has changed our expectations about having to visiting the markets, being on ground, startups are hard. Like they're hard period anywhere. They're harder in emerging markets. Things change on the ground. Like there are cycles. Things go well, then things don't go well. To navigate all of that, for a lot of these VCs, it's very, very important to have these local partners. And we're seeing that play out with multiple funds. And I think like that's really awesome and exciting to see how it's playing out. I think in the terms of outlook, this year is going to be phenomenal. In January, like we were doing a panel with Chris Schroeder and 500 startups and all. And I was, basically predicting, look, Pakistan is going to be much bigger than, say, Egypt and all. And I got some, like pushback for that. And even as recently as April, like people were like, oh no, Pakistan, there's no way this year will be bigger than Saudi, any quarter for that matter in this year. And I think that's going to happen. This year is going to be phenomenal. And if you take like 5-year view, we'll have a year where $1 billion+ in Pakistan will be invested in a single year in VC. And that's phenomenal. But it's not going to be a straight line. I think next year might be more challenging. To whom much is given, much will be required. So all the large fundraising rounds that raise the expectation in terms of what founders as a whole can deliver over the next 12 to 18 months. And I think like that's where we might see a dip in like that larger rounds happening. But we'll see. I think it's a very exciting time, and it will require everyone partnering together to keep this momentum going.
Tariq, would you like to add to that? What is Fatema Gobi looking at going forward as far as the fintech space or investment in general in Pakistan is concerned?
Sure. I think, again, just to give you guys an overview, we have done, I think we've announced about 6 or 7 deals, but we've done a lot more that which will be announced in a couple of months, right? So our strategy is, again, I think we've got a few more areas within the fintech vertical to take exposure in, and I think what we would do is, again, we are agnostic. We try to spread our bets as wide as possible, but fintech is going to be a key element, right? And we are trying to essentially identify where are the bottlenecks within the traditional space, the traditional fintech space in Pakistan, and see how technology can disrupt those spaces, right? So we're also on a learning journey, trying to understand the value chain across fintech and try to understand the specific challenges that folks on the ground face, right? So we've got a lot more coming. I don't want to share too much, but you guys will see some announcements very soon.
Oh, come on, you can let out one secret maybe. Or no, just kidding.
Secret is it's in fintech.
Yeah, is it in fintech?
Yeah, we've got a few more fintechs coming up.
Okay, great.
Got a few more, yeah.
Yeah. Rabil, so what areas within the fintech space do you think are still untapped? What do you see as potential startup ideas that are now going to emerge? Are there other verticals that you're particularly excited about? And this I want everybody to cover because I really want to know if all your funds, what kind of verticals you're looking at in addition to fintech.
Yeah, no, I think that's a very good question, because we tend to use a broad brush when we're talking about fintech, but like, the sub verticals within it are also very different in many ways. Like a payment aggregator or a payment provider, some sort of a payment service provider is very different to taking credit risk, for example. And while digital lending might be a channel through which lending is taking place, the entire kind of like construct of it is very different. And we haven't really seen much else beyond those initial payment providers, some of the neobanks that are looking to become those digital full-fledged banks, going in the market with some sort of an anchoring hook initially. And what that hook is different in different cases. So we have, like, on the one hand, Tez Financial, which was again going to be direct lending, to then build on additional products and hopefully have an overall bank, a new bank. We've now seen, like, the Sada Pays, the tags, get funding to build towards that. But from our perspective, I think there's also some elements that have emerged, which were, I wouldn't say part of like a greater trend within the country, but like certainly spaces that had seen startups emerge and be successful elsewhere in other ecosystems, and which are now being adapted for Pakistan. So to use just two examples, Mispa's I2I and us, we invested recently in Abhi, which is an earned wage advance platform. Again, something that conceptually has a lot of potential in Pakistan, but it hadn't been attempted before, at least not in the form in which it is being attempted now, because banks are not really set up to do that. And so we have to see how adoption is for that. How do the economics translate? Similarly, buy now, pay later is kind of now, like, with kind of Klarna having taken off. There is now with KissPay an attempt to try to tackle that market. So some of these adjacencies are coming up, and I think we are taking this really on a case-by-case basis. It's not we don't think Pakistani startup ecosystem is mature enough for us to say, okay, we want exposure in this space, and then you have 10, 15 options to pick from. It's really in some cases also a little bit reactive in terms of where are those smart individuals that are picking up on some opportunity and a gap in the market, and then really kind of bringing together the tools and resources required to have a crack at. And I think that's something which has driven our portfolio construction over the last couple of years as well. But it naturally still happens to be the case that we have more concentration in fintech and logistics, because a lot of those companies, and I think maybe Atif mentioned this earlier, fintech opportunity straddles across those industries as well. And I think what we're hopefully you're going to also find out soon is that Baikia will become more of a fintech than what its original genesis was as a ride-hailing company. And the first wave of those investments that were made, including one of our payment companies, M-Pesa, fingers crossed, but we're looking at exits soon. So I think the idea is really that there has been some evolution. There is now some more opening up of models that can be backed, and there is just more generally greater confidence in the market and in some of the founders that are now either coming back from abroad or are now onto their second or third ventures within the country. So we're going to see more attempts at it, and ultimately what we provide is risk capital to experiment against that. And I think that's something we are going to see much more of going forward.
So that's wonderful to hear, Rabil, that there's going to be an exit. I remember, and especially for people like us who've been there part of the ecosystem for so long, these are some of the questions that cynics were saying, there's never going to be an exit out of Pakistan, and you guys are just, going into this without looking into the depths of what is needed and all of that. So I'm really delighted that, fingers crossed, it's going to happen. The rest of you as well, there's a question that we will follow up with from Fauzia Naqvi. She's very happy with the panel. Great panel, she says. What future regulatory changes do you think are needed to grow the fintech sector? So we'll cover that later. But first, the question that Rabil answered, Are there any untapped areas, Misbah, that you feel in fintech that are emerging that we should be looking at? And also, what are the other verticals that you're particularly interested by?
Sure. I mean, I think like Rabila already said, fintech is such a broad space. There's so many different verticals within it. We've only scratched the surface on payments. We really don't even have that many payment options out here, payment aggregation or direct payment facilitation. There's stuff starting to happen in SureTech, which, believe it or not, is also part of fintech. We're starting to see things on the infrastructure side where you're building the rails like Rust and others that can actually build products on top of that. I think there's an opportunity to look at savings, at payments, fee payments, tax payments, government benefits. It's a whole host of things, and each one of them almost requires its own sort of like vertical and solution, multiple solutions within it. I think if you also to think about like what Angela Strange said recently from Andreessen Horowitz, is like every company is going to be a fintech. And what that really means is that you may start out providing financial services of a certain sort, or you might start out providing other services. But at the end of the day, the goal could be then to do what like Udhar is doing in India, for example, where Udan is doing in India, where the idea is to actually get to become a fintech because you have access to credit data. So you can actually lend to SMEs because you've been providing some kind of service to SMEs, at an earlier stage. For example, we've invested in CreditBook, which is a company that's doing digitization of ledgers. Now they're working with SMEs where they're already building those relationships.
We've lost Ms.
Similarly,
you're back. Your
Oh, I'm
voice
sorry,
faded
I
out,
didn't-
Ms. Buzz, so if you can just start from a few seconds ago.
Okay, so I was just saying, so you have companies that start out with financial services and then want to continue in that, and then you have others that are adjacent and are providing services that are around finance, but that can actually grow to become fintechs in the future, like we've seen with Udan in India, for example, starting out with just providing simple services to SME retailers and then growing to become a pretty serious fintech with credit options and more. So I think there are a couple of things. I think there's one big opportunity also is starting to look at fintech as a service, or banking as a service. So where can you provide the platforms, and who are the ones which are the kind of companies that can actually provide those platforms where then others can come and build on top of that. So hopefully Rust is one example of that kind of infrastructure being put into place, the rails being put into place where now other players can come in and build more on top of that. So I think there's a lot to be done, and there's a lot of opportunity in this sector, broadly speaking.
Right. Atif, do you want to add anything to that? And I'd really like to know what are the areas that you are looking at that you find very exciting.
Sure. So I think Rabir and Misbah covered a lot of ground really well. I will add a counterintuitive fintech one. You know what percentage of transactions even in the US are in cash? Even the US, it's 30%, close to 30%. It's crazy high, right? India, it's close to 90%. Indonesia, it's over 85%. So cash is very sticky, right? And in Pakistan, I think like going after like building these new payment stacks and building new banks, those are great areas and needs to happen. But even if you play it out 5 years, cash will be like a very large part of the economy. So actually a super interesting play in fintech is how do you enable this cash coming into all these digital services? So creating the on-ramps for cash. So if somebody is getting paid in cash or the customers are paying in cash, how do you then let them deposit that cash without having to go to a bank, wait in line, and so on? So I'll throw that out. That's a pretty exciting area that I'm curious about. I think other than that, Pakistan is still so nascent. Like we're so excited by everything. At tech, I feel Byju's officially now is the largest startup in India. That gives you a sense. And education is one area where Pakistan and India's mapping could not be closer. I mean, you can argue about, fintech being different. You can argue about other things being different, but like, it's the same thing, like large centralized exams, same sort of like Asian tiger parents, who want kids to do well, lots of spending on education. So I feel like that's an area we are really lagging in. But we're very excited about, we recently made an investment in EdTech that we haven't yet announced. I think like there are going to be multiple really large startups in tech, attack that problem, just like it happened in India. So we're pretty excited about that.
Okay, great. Tariq, what are the areas you find most exciting, and where do you see, are there any untapped areas in fintech that other three friends have not mentioned already?
I think again, if I think the panel has covered quite a few very interesting areas. But again, what Misbah said about banking as a service, I think that's a massive area. You know, if you take into account, you know, the massive, you know, underbanked population in the country, right? And you know, just based on our experience so far, the banks may be slow, but they're actually very willing and open to work with fintechs, right? So it creates a lot of opportunity for banking as a service opportunities in the country. What Atif said was very interesting. You know, cash is king, and you know, opportunities, you know, where you have an offline to online kind of fintech platform makes it very interesting. You know, companies like OneLoad, very interesting. I'm not giving any hints out here, but very interesting company. But just outside of fintech, I think what we're looking for is health tech is a space that we are pretty keen on. We haven't taken any exposure as yet. There are a number of players that we're looking at. So still very interesting, still very nascent, but a pretty exciting space. Beyond that, I think what we're looking for as well is you know, fulfillment, warehousing, social commerce. I think all of that we haven't really seen pick up in the country yet. And again, the way we kind of identify sectors that are interesting, we pretty much benchmark Pakistan to Indonesia, right? What has happened in Indonesia? And again, you obviously have to look for opportunities that that are localized for the Pakistani market. But we do believe we will see very similar trends, right? So social commerce has picked up in Indonesia. Definitely keen to see what comes up in the country.
Great, Tariq. Okay, so now we get to this question about regulation, which I was wanting you guys to talk about. Do you feel that the current regulatory frameworks are conducive for fintechs and startup investing generally? Yes, we know that there have been some new regulations that have helped, but do you think they're conducive? If not, what more can be done in terms of policy and regulatory changes that you would like to see? So who would like to start? Rabil?
Sure, happy to. I think, Jahan, in the last year or two, there have been some constructive developments from the regulation side that are opening up new avenues. But being completely honest, I think there is still a little bit of confusion around, both in terms of like what exact licenses might apply, what like authorizations are needed before you can get started, and eventually also, like, as startups evolve over time, like, there's more offerings added onto it. What that final shape looks like is a little bit unclear, and hence the starting point becomes more difficult to also pinpoint as to what exactly is within the domain of current regulatory frameworks that are out there, and how does a startup kind of go about tackling those. To illustrate this point, just a day before yesterday, in a call with like a regional player that was looking to enter Pakistan, 4 different license forms were mentioned on that call, as in like, oh, should we try to come in and get this because this will be easier to start with, and then eventually we can apply for XYZ, and if we need to use that service, then maybe we go there, otherwise we'll just have the license and not use it. Now what that does is it adds to this like need for risk capital that, like, I think Atif initially pointed out. Fintechs in general require more, and if the hurdles that are set in place are very high, I think it just creates more barriers to entry, for anyone wanting to have a crack at any one of these gaps that might exist in the market. So while the direction of travel has been right, and there has been a lot more opening up of the kind of opportunity, from regulatory framework perspective, but it's not yet crystal clear in terms of how to go about tackling a fundamental problem that you see every day, and what's the best approach to take against it. And I know that's really what is described as innovation, but it really should not be taking 10, 15 minutes for us to make a payment to another person that has an account. But yet we still have to, unless we try to use some other means, or we have like, our own kind of like, preference around EasyPaisa or JazzCash being as a in between for, on the one side, having a bank account, but on the other side, like really providing cash to the individual that is looking for that cash. So I think regulatory wise, people have the right intent. They are trying to make changes. RASC coming on would hopefully clarify this, but then by the same token, it has kind of like nullified a little bit what the objective of the EMI license was. So there is a little bit of clarity that is required. And I think that's why, at least as an investor, we're also, I don't want to say taking a step back, but really trying to see, like, do we understand what a particular startup's offering is around fintech? And if that clarity is not there, maybe we want to also just wait and see before we can jump in. And I think that is partly also down to the regulatory frameworks that we still continue to have.
Okay, Misbah, what are the kind of changes you'd like to see?
Yeah, I actually also wanted to add something to what Rabeel was saying. I think on the regulatory clarification, that's really a good point. It's also, there are still some barriers to entry. So there is still a minimum capital requirement for companies, whether it's 200 million rupees or 100 million rupees, depending on which license you go to from the state bank that is there. I think on the plus side, the SECP sandbox is really great. We often don't talk about it in the context of fintechs, but all non-banking financial companies actually come under that. So insurance, etc., would come under that. So that's also something that is good. Again, it's their capacity to allow that many fintechs is not going to be there, right? They do a cohort, they have a few that come in a year. So I think if we really want to see a sea change, some of this clarification and some of this easing up, there's further work to be done on the regulatory side. I think the other thing that I wanted to mention, and Rabeel mentioned RAST in that context as well, and Fauzia also wrote this in the chat right now, is that there are things that are still broken. So as much as we say payments are there, as much as we say e-commerce, you can pay online, in a lot of cases, the customer experience is not great. Customer service is not great. I mean, if you just go on Twitter and you see the kind of complaints that people are doing about banks all the time, that's definitely a reason why fintechs need to exist in Pakistan. But at the same time, even the experience with smaller companies facilitating payments is not always clear. From a merchant perspective, it often takes them very long to integrate with some of these solutions. From a customer perspective, the customer service is not there, or there are things that are broken. So I think even within this, this whole regulatory framework being a little overarching and kind of digging in a little, I think there's also requirement for us to start looking at streamlining things. Somebody shared this, Jahan, on a group that you and I both are on recently, and really resonated with me. I don't know who the author is, but it said, digitizing a broken process will just give you a broken digital process. So just because you bring in electronic into a word and make it sort of the tech aspect of it, doesn't mean that it's suddenly everything is great and it's not broken anymore. So I think aside from regulation, we also really need to look at, like, where are we servicing the customers in a way that is actually bringing in real efficiency. And just one other thing that I often talk about is, like, in fintech, from a regulatory perspective, that's the push, where the government can bring in certain regulations, improve things. The pull also has to be there. And I think after COVID and in COVID, we started seeing people get a little bit more comfortable with doing things online. I think once they start recognizing the ease that some fintechs bring to their life, like electronic payments, for example, and I know we have a love for cash, but if we start seeing that how much more improved our lives could be, or how much more convenient certain things could be, I think the pull will start coming from the customer side. So we need the push and the pull both to help the sector really thrive and keep growing exponentially.
Yeah, Misbah, thanks. Yeah, that resonated with me as well. I think very often we don't look at the entire product to see what kind of solution we're offering. It's just digitizing a broken product is not going to do anything. Atif, in terms of regulation, so one of the things I wanted to bring in, and I think was touched by both Rabil and Misbah, was that regulations aside, the disconnect between regulation and the services that are being provided by banks, there is still a large disconnect because it's taking time for them to accept and to execute. So are there any, in your opinion, any other regulations that could come in, and how can we sort of accelerate the process of the banks actually offering the kind of services that are needed, even to fintechs, because fintechs also to some extent rely on banks?
Right. So look, I think there are two types of things that slow down progress. One is large barriers, right? So if you not even have a mechanism to give licenses, banks would be happy doing what they're doing, and there won't be any competition. So I feel there's been a lot of progress on that front. So you'll see that banks either have to get better, or they'll lose customers and they'll lose revenue. Now the second type of issues are, which is a death by 1,000 paper cuts, right? So now you need this very small thing, which looks just completely fine and reasonable on paper, but when you start going, like, you end up pulling your hair because it's simple things like, oh, you need a company seal on a document, which just got repealed, I think, in the latest amendment to Companies Act that just got passed today. But you literally have a physical seal stamp on the paper, so that requirement is no more. So I feel like that the biggest way to make progress against that is actually startups, which are a force of nature. Like, now that you have these fintech startups, like, they'll go and start building, right? And the first few, like, they take one for the team, they will have to do it, but I think they push through these changes, and through that I think people's attitudes change, processes change. You find like which banks are more progressive than others, and some are, and you can see that differences, and it's very clear. You talk to like 5 different startups and they all point like, oh, this bank, like, they are actually more open and like moving faster. So I feel now that wheels have started to move, we should see much faster progress on that second front as well.
Okay. Tariq, you mentioned that we should compare ourselves with Indonesia and how fast the growth has been there. So do you see any regulations that have appeared, say, in Indonesia that perhaps we could learn from, or even in Malaysia and other countries in this region? Is there anything that we could learn from them and adopt? And how have they tackled the situation of regulation versus actual implementation by banks?
Sure. I actually think it's the other way around, right? I think there's a lot that we can learn, being in Malaysia, Indonesia, from the regulators in Pakistan, right? I think what we need to realize is the ecosystem in Pakistan has developed much faster than we all anticipated, right? And everyone is trying to play catch up, right? And yes, you're going to have a lot of growing pains with a lot of different regulations being popped out every other month. But I think what's really encouraging is the fact that the state bank and the regulators are very open-minded, right? And just as a comparison, there are a lot of things that you guys have in Pakistan that we don't have in Malaysia, right? We don't have in Indonesia. Our banks move way slower, right? And we've technically had a head start, right? So I honestly think, yes, there are a lot of challenges in the ecosystem from a regulation standpoint. Everyone is just trying to keep up pace. There are a lot of inconsistent regulations. You've got the EMI, the PSP. You've got now the new digital banking regulations are coming up. So in my opinion, the regulators in the country are doing the best they can. They will try to streamline it at some point. They have to streamline it at some point. But, we think, just from a Malaysian perspective, there's a lot more that we can learn from you guys than you guys can learn from us, because we're still moving in a very snail space.
Okay. Misbah, I'll come to you first because I know you have a hard stop at 5. So the next question I have is that a lot of founders will be interested to hear your opinion about how these large deals were actually, how are they really sourced? Do these companies approach investors here locally, and or is there a lot of competition between VCs to source the best deals that are out there? So, how does this happen? Because, there are a lot of founders who've come to us and said, hey, so-and-so raised $15 million or so-and-so raised $7 million, but I've been in this space for 3 to 5 years, and I find it, that investors are not willing to give more than maybe a couple of $100,000. So how do you decide on the large investments that you place? And is there something that founders can learn? Are there bits that probably they are not addressing, and that's why they're not getting the attention of investors? And is there competition amongst various investors for the best deals out there?
Wow, so many questions, some loaded and some not so loaded. So yeah, I mean, look, I think all of us will have certain perspectives, and some of these we will agree on, and others we probably have different ones. So happy to get started. I think, look, what we're starting to see is, like we said right at the beginning, is like overall interest in Pakistan. So that macro question of like, is Pakistan a market I want to invest in, is starting to get answered for a lot of people. And that's why I think the kind of rounds that we're starting to see now are a little bigger and different from what we were seeing 3 years ago, right? You've been in this ecosystem for longer than that. So we've really seen the last 18 months to 24 months have been where we've started seeing this really big uptake in international investors as well. So I think one is this, again, this broader perspective of like the market is being looked at differently. I think one of the reasons why we set up i2i Ventures was because we saw a gap at early stage investing, and we saw a gap where founders were not always getting access to good investors that would work with them to help build them. And I'm happy to say that has changed over the last couple of years. Now we're starting to see, been seeing more people, both at the angel investment, angel syndicate side, but also on the fund side, that are really willing to roll up their sleeves and work with their founders to help them get to the next stage. And so I think sometimes it's about starting with the with those right investors also, which ultimately helped you raise like even a bigger round. I think ultimately what it comes down to, which is what we invest in, is people. So we invest in founders first and foremost, and the opportunity. So you have to see what opportunity are you tackling. Just because you're in the finance space or just because you're a startup doesn't mean that you're necessarily going to be able to raise the same kind of money that somebody else will, if you have a different background, if you have a different skill set, if you're a different kind of founder, but also if the problem you're solving is different. So I think there are different pockets, and we're starting to see, I think Tariq made a good point about Indonesia. There's a lot that's happening in Pakistan now, where you can look at where Indonesia was, the patterns that we were starting to see, that we're starting to see now. And so there are some areas which are heating up, and that will continue to attract big capital. I think the Careem exit is one that has really helped spur on not only good founders coming in, which have operational experience, but has also helped people think bigger. And Mudassir Sheikha, even though Careem has not been a Pakistani company, Mudassir being from Pakistan has been an inspiration to a lot of people. So people are sort of fashioning, how they get into their startups, also looking at what's happened across different markets. So I think it's part of it is who the people are. We're starting to see people that have experience either in other startups or in, let's say, FMCG or the corporate world that are coming into the startup space right now. So that quality of founders has also changed. I think it's important to be open to feedback. And this is something that, even in our accelerator program, we've seen the founders that do best are the ones that are open to feedback and are actually listening to what, they're hearing from mentors or people that are with them early in their journey. So I think there's this balance, and again, it's an intangible, but there's a balance between believing in yourself and being stubborn about not listening to what you might be hearing from outside. I could go on. There's like 5 other points that I can think of, but I want to give the others an opportunity as well.
So
yeah, Jehan, on that, sorry to cut you off, but I think in the question, we also need to be clear, like, I think the raise that a startup or founders are targeting should be driven by what they're going to use the capital for. And ultimately that argument should always apply. That would you rather raise more at an early stage and get diluted more, which will probably create some sort of a disincentive down the line. So I think it should be the size of a raise should really be driven by what sort of milestone are looking to be reached or hit by that capital raise, and then hopefully going on to this venture financing continuum or journey that like every startup has to go through. So I think on that question, I think founders should not worry about like, having a preconceived idea that, okay, they will not be able to get out of bed or do something unless they have like $2 million because the last 5 news items that they read were all 2 million plus financings for startups in Pakistan. I think that's not the right approach to take. In terms of approaching VCs or is there competition amongst VCs? The reality is, as much as we would admit, like to admit otherwise, there is, because we do not have like 1,000 backable startups in the country that we can all take our own isolated positions. In any case, even if we did, it might not make sense to actually separate or disperse out all the limited capital that we say is available for early stage backing in Pakistan. It should maybe be concentrated in some of the ones that are going to that have the best shot at success, and hopefully with the returns that are generated, there's some recycling effect that takes place when like even the founders that are getting exits will hopefully pour money back into it. So every VC, every firm has their own approach towards deal sourcing. Normally, I would say most of the deals that are taking place, all of the people on this panel might have heard of them or met the founders at some point. But it's also about matchmaking with the investor that you're looking to bring on board. What is it that you're looking for, and whether a particular firm provides that or not. I think now the whole element of what other than capital is starting to come into play, maybe a little bit sooner than what we expected in Pakistan, but now it's no longer an assumption that as long as you can write a check, you'll get it. And so sometimes we even have to do some singing and dancing and make sure that we can get like allocation in companies that we're particularly excited about. So a lot of those things are now coming into play, which would not be the case if they were just like 1 or 2 providers and a whole number of companies to pick from. But I think this evolution is also natural. I think what Atif mentioned earlier, what we are seeing, like some of the contributors of these larger checks to be international funds, but in most cases they would want some sort of a local fund to be present there because again, it's Pakistan after all. It's not easy to do business here, and I think that perception reality gap that they suffered from, people outside Pakistan suffered from, doesn't get bridged in one day. And I think that's really like a little bit of a collaborative approach that is required. And I think we are also going to see more common investments from within our own funds as well. I think that's really going to be like the next order, maybe like impact that we're going to see is because ultimately talent is limited. You want to back the talent that has the highest chance of success, and we all ultimately would want a little bit of a piece of that. So I think hopefully there's going to be more evolution towards that direction. But right now, as things stand, there is a little bit of competition. Everyone wanting to make sure that we get our allocation. But like on your first question, it's really about don't think about like fundraise from a perspective of X number of venture funds here, the right checks in this size. And so if I wanted to I want to start by raising this amount from 1 or 2 players, it should really be driven by what is it that you're looking to build and what tools and capital and resources do you need to build it.
Atif, your opinion on this? And there's another question I want to ask you after that.
Sure. So I'll be super quick. I think the reason, founders do what they do, it's not the money, it's not even the startup, it's a particular change in the world they want to see, it's a particular problem they want to solve. So you always have to start there, right? And then the question is, okay, a necessary consequence of that in today's world is that you have to raise money and you have to work with VCs. Most founders, if they didn't have to, they wouldn't bother, right? So let's be honest about that. And now then you have to figure out, A, how much capital do you need? B, what Rabil was pointing earlier, who do you want to partner with? At the end of the day, it's partnership, especially at the earliest stages. And thinking through that, and then in terms of maximizing your chances of that partnership happening and you raising capital, I feel like actually the pitch process is a very good predictor of how founders will do afterwards. You know, so if a founder comes in and they haven't learned, and there's so much material on the web now, right? In terms of, you know, like how to talk to VCs, how to create a pitch deck and all. And if you haven't put in the work and you haven't learned fast enough, that means you might not learn fast enough when you're solving the actual problem either. And that's an important signal for us. So I would say just stay focused on that. Like this is a necessary thing you have to do. Learn about it very quickly, and you know, put and then talk to the people you want to talk to. It's not that complicated.
Another question I had was, when you're looking at the deals now that have come through, especially in the last few months, there are a number of investors who are co-investing together. Does that become a problem at a later stage? Because, you know, when I asked all of you what your investment thesis was, they were quite different, right? So when you're all investing together, is it a problem, or do you decide on who that one person is who's going to deal with the founders, you know, throughout? Or is it something that becomes really complex? Because that's something that
I don't think it
worry
should.
about.
Yeah,
Okay.
yeah, I don't think it should. Look, for founders, it's great if they're getting multiple partners. It depends. I mean, you know, I think in Pakistan, I haven't seen partners being overly involved. Like there are some investors who actually can be a distraction and they want like all these reports. I don't think that's the case in Pakistan. We're so early. The people, VCs here, they're doing it for the right reason. They're available to help. So as long as that's the case, multiple partners is actually a good thing. So we have done like a couple deals with Tariq and Fatma Gobi team, and you know, we've in particular for Airlift, like it's been a great experience, very complementary networks, very complementary skills. I'm more connected with the Silicon Valley. You know, in Asia, they have been able to connect us very well, learn from those startups. So I think we need more collaboration. That's great, and we'll see more of that going forward. Yeah, hopefully it stays a fairly collaborative environment. That said, you do compete for deals, and if you have multiple funds whose fund model, and that's very important. If you're writing small checks, it's very easy to get into rounds, collaborate and all. If you have ownership targets, then you know, like you want to lead the round, and in those cases, I think you know you do compete for deals, and you know there is typically one lead at the early stage, but I think like there is room for more funds to participate in a deal.
Tariq, what, yeah, sorry.
Sorry, go
You
ahead.
were-
Go ahead.
Yeah. No, I was going to say, so there's a question here on in the Q&A section. What is the appetite of the VCs here on the panel to invest in innovative fintechs? Are they willing to take one for the team? I don't know what that means, one for the team, but are you willing to, I guess what he means is, are you willing to take a bet? I think investors do, right? They're taking a bet anytime that they invest, right? So
quite literally our job description, quite literally,
Yeah.
that's our job description.
Exactly.
We wouldn't have anything to do otherwise.
Okay, Kamran Khan here asks, I guess it's not the Kamran Khan who has the show on Dunia TV. This is some other Kamran Khan who wants to know, what do you look for in a startup in terms of the top 3 qualification criteria, even at the concept stage? So I don't think any of you actually invest at the concept stage, do you? But even at the later stage, what are the top 3 things that Tariq, you, Fatma Gobi would look for in a founder?
Sure. I think you know, it's at the end of the day, when we back a founder, is similar to getting married, right? Because it's going to be a long-term journey with this individual, right? So it has to be someone that we get along with, we work with, and we see eye to eye, right? And I think that's very important. You know, with real estate, right? Location is always the tagline, right? And I think with what we do is the same thing, right? But the word here is founder, right? It's all, when we look at opportunities, and again, let's take away the market size and the opportunity and the strategy and all that stuff, right? I think when we make an investment, we make a call on the founder first, right? We want to ensure that we are backing a founder that is smarter than the aggregate of the brains that we have as a firm, right? We always need to back founders that are smarter than us. And that's, to me, that's how we do it.
Okay, great. Okay, Mavish Arifin from I2I wants to know your opinion on whether Roshan accounts could possibly be used as a vehicle for angel investments. And what could that possibly look like? Rabil, you think they can be used for angel investments? And what
I
would,
think
what
absolutely,
would be the framework?
absolutely. I think no, I think they should be. I think it's a way of channeling some of that capital back, and if real estate is an option, putting it into like some sort of bonds is an option. Why can't angel investments be part of that same like call it permitted set of investments that are allowed? And in fact, a few years ago, as part of the amnesty scheme, like this is something that we discussed with the government as well, where if there was this provision to for the capital that is outside the country, for it to be brought back, if it was channeled into, let's say, the venture ecosystem, whether that should maybe allow for certain tax exemption or benefit for those people that are bringing it back. We've seen this in other schemes, such as in the UK, you have the EIS or the SEIS programs, which give you some sort of both downside protection or tax benefit from investing into a particular space, which is typically this highly risky venture capital space. So I don't see a reason why it can't be. I think it just requires a certain intent, and I think the way Pakistani big business groups also work, or certain industries or sectors that are not tech, they like to have similar incentives than given to them. And the problem becomes that if it's going to be just invest anywhere and you get that benefit, I think that's what prevents some things from happening. But I don't see any structural reason why they can't be used for that.
So we are already over time, but I'd like each of you to address this question is, what would your advice be to founders and aspiring entrepreneurs who are looking to attract investment? What are some of the key things they should keep in mind? So
just get up and start doing something. Really, just get up and start doing something. And if you're building something interesting, it's our role to find those opportunities to back as well. And if in that determination you figure out you don't even need VC, then that's great. I think that's like another a great outcome to, and like something which hopefully is also fulfilling. But it all starts with getting out of bed and starting to do something.
Atif?
So I think one of the most important skills is being able to take other people's perspective, right? And I think it's really, really important for founders to, and you start with your why and you're solving a problem, you take the perspective of the user and you're building something, to Rabil's point, like just start building, because that would be important to be raising capital. But then when you are thinking about, okay, I need to raise capital, actually understanding the VC's perspective, being able to take that very quickly and saying, look, is this a large enough market for this particular VC or not? If they over-index a market, right? And then talking to the right people, so you're not like burning your cycles unnecessarily based on that fit. And then through that process, actually being able to talk to those things. So for instance, for us, like talk to us about how big the market is, talk to us about what you've built, like so far, and how quickly are you learning and building that. So those things matter a lot to us. For instance, they matter more than what school you went to and where you worked. So just bring that out, right? And somebody had a question here saying, will VCs invest in a year-old startup? Of course, like Airlift was like just barely a month into launch when we invested. Same for Bazaar. So definitely, so it's not a function of time. It's like what you can demonstrate, what you've done in that time, that matters to us.
Tariq, what about you?
I think, firstly, you gotta, for new entrepreneurs, you have to be able to do something or pick something that you have some sort of passion in, right? Because it's gonna be a long journey. There're gonna be a lot of painful days, and you need to love what you're doing or the problem that you're solving for you to kind of ride through the ups and downs, right? Number one. And then I think most importantly, you have to go all in, right? If you don't go all in, no investor is going to fund you, right? And I think those are the two things I would say here.
What do you mean go all in?
Like, if you're going to solve something, if you're going to start something, again, you can't have a job as a safety net, right? That could be one example, right? I'm not saying, you know, empty your bank account and put it all in the company, right? I'm saying your time, right? All in from a time perspective, right? Has to be spent with whatever, you know, you're looking to start.
Right. Well, thank you, all of you. It was a brilliant discussion, and Ms. Buzz already left, but I want to thank her as well. I'm only sorry Meena could not join us, but I think there was a lot of learning from the discussion we had today, and a lot of things that we will see if the predictions that you came up with are correct, and some secrets that Tariq would not share with us, we will find out about in a month or two. I'm sure Atif and Rabil are also hiding a few deals that we will find out about. I have my suspicions. So good luck to all of you. We're really excited about the space. We're really excited about the entrepreneurship space, and we look forward to having you back again for further discussions. If there's anything that you think needs to be discussed, any policy angle, anything that you think will help entrepreneurship or will help the ecosystem to grow faster, just let us know. That's what we're all about. We've spent the last 6-7 years doing this, and we want to continue to be positive and productive as far as the entire ecosystem is concerned. Thank you once again for your time. I know it is precious, and hope to see you in person sometime soon. Goodbye from Jahara and Catalyst Labs, and we'll see all of you again soon, the people who've been watching and those who will see the recording.
Thank you,
Thank you for
Jahan.
having
Thanks,
us,
everyone.
Thank you.
Bye.